Hello, investors. Thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I want to talk about Confluent. So, Confluent is a platform that allows companies to integrate their data, taking it from the fringes right to the center of their operations to drive real time data insights. So, we're going to talk about its growth rate. Going to talk about one of the blemishes that I highlight on its report, which is its path to profitability being, practically non-existent. And then we're going to talk about its valuation. So, just going to jump right in. So, it's quite interesting that in the past several weeks, many high growth names have sold off, but Confluence hasn't really meaningfully sold off. It's really kind of stayed quite high. Quite interesting to see. You can see here that it's a company that clearly is growing at a very rapid rate. The past 4 quarters have seen accelerating revenue growth rates. So it's obviously very attractive. You have the guidance for Q4 pointing towards 56% year-over-year growth rates. Keep in mind that Q4 of last year was the easy comp for the company. So if they were able to accelerate throughout the year, I suspect that this guidance for Q4 is really very conservative and it'll just like smash through it. Will it reach 60% year-over-year growth rates? It's difficult to say right now. Probably, it looks likely. But so that's what you got to play around with. It's a company that's rapidly growing. Now, so what's at play here? So as companies digitalize, Confluence is right at the center of that. Okay, so it provides a platform where the data is fluid and in the center of the decision making. Okay, so rather than having a static servers outside of the operations, it's taking those servers and putting them at the center of everything that's driving real-time decisions. So if you think about it, the way that it works is by creating a cohesive platform for data, so that the data is not siloed off in different servers and it's cloud native. So it's not something that was kind of designed for to be on premise and then kind of upgraded and changed and iterated over time to work in the cloud as well. It's just simply already from the design, from the core. It takes that open source platform and it drives it right to the cloud. So that's it's really attractive. And you can see here I've highlighted this slide that they got from their presentation, and they got a very diverse customer base from retail, healthcare, banking. I mean, it's really that's really great to see, and see here some of the logos that they've got. So if you think about it, that's really attractive because you're not kind of predisposing yourself to too much risk in one space. So that's a lot here to get attracted behind Confluence. And what I've said before, and I'll say again, follow the customer. If customers are rapidly growing by 75% year over year as of Q3, that leads you to believe that the company has a lot of value because if customers move rapidly towards a platform, that's attractive. And if customers start to fizzle out, that would not be attractive. But you can see here, by any stretch of imagination, this is resonating very strongly with customers. One of the things that I found was interested in was the dollar-based net retention that they were previously reporting. They stopped reporting. That being said, so for Q1 it was for Q1 21 it was 117%, but for Q2 and Q3 they stopped reporting that. But they say that it's above 130. So that's obviously very attractive. You have strong customer growth and you have strong net retention rates. Like there's nothing, no blemishes there. The one blemish that I do find is that the company is meaningfully unprofitable. So this is a non-GAAP basis. On a non-GAAP basis, they went from negative 32% year over year, negative 32% in last year's Q3, and now they were at negative 42%. So, as the more that they grow, they're not really seeing that positive operating leverage driving through the income statement. So I mean, for me, I kind of would like to see that. It's one of the things that could be boring. I do find that profits do matter. Not a lot of people seem to believe this nowadays, but I seem to think that it does matter. And it's one of those things that probably doesn't matter until it matters. And if you think about it, right, investors are asked to price in. So let's do some calculations here. So analysts following the stock expect the company to grow into next year, its revenues by 35% or thereabouts, 37% year over year. Okay, let's say that analysts are all wrong. Let's say that the company actually grows its top line by 45% CAGR over the next year. So that will put Confluence at reaching 550 million in revenues next year. So if you think about it, right, that puts a stock price at 31 times forward sales. Now, just for reference, MongoDB, which is a general purpose database platform, is priced at 31 times forward sales too. But keep in mind that MongoDB has consistently seen its free cash flow margins improve. And for Q3 that they just reported a few weeks ago, it was negative 3%. This compares with Confluence, which was in the same period a year ago was negative 16%, and this year was negative 20%. So in the case of Confluence, they're not really seeing that traction in terms of their revenue growth rates improving their profitability profile. So in the case of MongoDB, you're paying a lot, but you're paying for a company that is at least moving in the right direction. In the case of Confluence, I'm not sure you can make that argument. So all in all, I think that it's quite difficult here. I know I can see clearly that it has a very compelling narrative, and I mean this is something that I was reading through. I was like, oh, this is really cool. I was thinking of Snowflake. I was thinking about like MongoDB. That was the one that came up to my mind straight away. And they talk about the total addressable market to compound at 20%, and it's going to reach more than 90 billion by 2024. So they clearly have a lot going for it, but I just wonder if all that insight is not already being priced in here. So yeah, it's kind of like that. If you want to find out what kind of names I'm interested in right now, don't forget to check out my marketplace. It's called Deep Value Returns. I help you become a better investor. You can check out what other people said in my reviews, see if that do your due diligence there, and see if it resonates with you. Come in, have a chat to me. Okay, see you soon. Bye bye.